Hello and welcome to my first video in accounting. This is a tutorial for terms every accounting student should know. Assets. Assets are resources created by a business with an economic value. This could be cash, could be property, could be stocks and bonds, anything that has economic value that can be exchanged. It is considered an asset typically. Liabilities. Liabilities are a company's obligation to pay an outside party. Equity, the owner's interest in the company. So expressed in a formula, it's assets minus liabilities. So it's what you have versus what you owe. Revenue. Revenue is earned income from the sale of goods or services or products of the company. Expenses, they're basically the costs that you pay to earn the revenue. So if I'm baking cookies, I have to pay for the sugar, flour, the equipment, so the rolling pin. Those would all be expenses to the cookie business. Net income. Net income is going to be what I make or my profit after all my expenses are subtracted from the income that I made. So if I'm looking at the formula here, it's net income equals my revenue subtracted from my expenses. So some essential formulas, as we went over, assets equal liabilities plus equities. And then, if you're given one of these terms or two of these terms, you can solve for the other one. Types of financial statements. So first up, we've got a balance sheet. And the balance sheet provides an insight on a firm's finances at a particular time. So it consists of assets. There's current assets, which is cash, and non-current assets, which is property. Something like could be a building, could be a piece of furniture that you're selling. It could be a car, could be anything. And then you have non-current assets, which is exactly that. So that would be a car, something that you can't really quickly get rid of or turn into an asset. Yes, you could sell it, but it's different than cash, where you could just exchange cash and transfer to accounts. Then you have liabilities. You have current. So you have accounts payable, that'd be like your salary. And that would be something like your what you owe the cookie supplier company. So if you pay for the dough, then you would have to pay the dough company, and you would have to pay them, from your accounts payable. And then you have long term. So let's say you have a loan with the cookie machine dough spinning company, and then you have a loan with them. So that would be a long term liability. Equity is common stock and net income together. So the next type of financial statement is an income statement. It provides insight on a financial firm's health over a given time period. So we have revenue equals services and goods sold by the firm. Expenses is operating costs, loan and interest, and taxes. So ultimately, the formula is going to be net income equals revenue minus expenses. Types of financial statements. We have cash flow statement. This is another important one. It shows the inflow or income and outflow expenses